Hi everyone, let's go through the high time frame, medium time frame, low time frame, and some new micro scenarios, including potential trading setups, starting with the bullish count on the high time frame, where this is a 1, 2, 3, 4, 5. Currently working on wave 5, where for me the most common target is this white box between 98k and 174k. In this scenario, we had a very nice bounce of wave 5 on the 0.5 fib, taken from the low of 2 to the high of 3, which also is the maximum target for wave 4. And also it made the low exactly on the 0.618 fib time, taken from the low of 2 to the high of 3, which actually is very nice confluence. And not to forget, we had a high volume peak at the lows of 4 as well, which can signal a reversal area, because the same happened at the low of wave 2, which was the COVID dump, ended perfectly at the golden pocket area for then a wave 3 to the upside. And you can see we had a very high spike in volume, and the same happened at the low of wave 4. If we then look to the upside and potential targets for this wave 5, the white target box over here has confluence with a few wave 5 targets. One of those is the 1.618 and the 1.236, taken from the high of 3 to the low of 4. This is the most common wave 5 target area between 98k and 174k. Then you can also see we have the 0.618 taken from the low of wave 1 to the high of 3 to the low of 4, which is another wave 5 target. And in the white box, we also have the 1.618, which is a rare target of the pool of the low of 1 to the high of 1 to the low of 4. The common target for a wave 5 in that same pool, which is the low from 1, the high of 1 to the low of 4, is the 1-to-1 over here. And because we have more confluence in the white box than the yellow box, which is from the all-time high to 98k, I would prefer price in this bullish scenario to go all the way to at least 98k. The potential trading setup in this scenario is then to see if we can get a bit of a retracement, enter on the retracement with potential longs over here, and then the stop loss below the low, as that is a very clear invalidation for then a very big trade to the upside. It should be noted that sometimes with very bullish markets environments, the market makers and the markets don't necessarily like to have big retracements because they want people to miss out. The same happened over here during this wave 3. You can see it constantly made higher lows, and we never really got a big retracement over here to enter with potential long setup. So this is something that I will keep my eye on, and of course I will inform you the moment I see stuff like that happen. The bearish scenario is that the all-time high is the high, and we're currently in a correction, which is a W3 wave, then an X, and eventually we're looking for a Y to the downside with targets of between 9 to about 12k. In this scenario, what is so important, also for the bullish one actually, is this support resistance area that is critical. We have a weekly order block here, support resistance area, the high time frame range value area low of this range over here. This is such an important area on the chart at the moment for any scenario, both bullish and bearish. But in this scenario, one would enter potential shorts over here with this potential short setup from basically the high time frame range value area low at 28.8k. Stop loss somewhere safely above, better safe than sorry, and then trading it to the downside in this wave Y. If we then go to the medium time frame, I'd like to show you the setups over here, where the daily, oops, I'm messing around, the daily over here, where on the daily we then have a WXYXZ. I don't necessarily like wave X not hitting the 382, which is actually quite rare, but it is possible, and wave Z hit its rare target, the 0.618. The common targets are below, but as you can see, wave Z did not hit those targets. If we then look at what is happening on the chart, then yeah, okay, we have two scenarios, right, that you see online. Either wave 1 is in and wave 2 is in, or wave 1 is not in and wave 2 is therefore not yet in. And in this scenario, wave 1 is not yet in, with this then being a 1, 2, 3, 4, 5. Wave 1 ending once more in this really nice resistance area for then a potential short setup to the downside for this wave 2. Most common targets for a wave 2 between the 0.5 and the 0.786. With between these, the golden pocket, the 0.618 and 66, those are the most, that's the most common target area for a wave 2. In this scenario then, for the potential long setup, trades can be laddered from the 0.5 all the way down to the 0.786, with then the stop loss below Z, as that is a very clear invalidation. If we look at the volume of the impulse, which is important in Elliott waves, volume is critical. We have then a 1, 2, 3, 4, 5 that we're looking at, which also matches the volume. So with with the wave 3, volume has been increasing. We had some nice peaks in the wave 3, wave 4, volume dying, and then now in wave 5 we can see some peaks again, but they are lower than wave 3, and that is always very important. Usually in a wave 5 the volume or the peaks of volume are lower than in the wave 3. So if we then go to the alternative that I actually just shown in a second in the bullish scenario, that is that this then is a 1 2 3 4 5 4 1. Then wave 2 is here, and we're looking for a lot more upside with at least 43.5k as a target. What I don't like about this scenario, however, is that wave 2 was so ridiculously short. It hit the 0.236, which is incredibly rare. I'm not even sure if I've ever seen it. Usually it at least hits the 0.382 fib time, taken from the low of wave 1 to the high of wave 1. So I'm not necessarily a fan of this scenario at the moment. It's an alternative. The bearish scenario, in a bit more detail compared to the high time frame, is that we then have this WX and we're looking for a Y to the downside, and we're currently working on an expanded flat ABC in this X with the final wave, wave 5, inside this C, inside the X. So we then have a 1 2 3 4 final wave 5 to the upside. Wave 4 was brilliant, bouncing on the 0.5 stop loss. Well, wave 4 is not allowed to enter the price action of wave 1, so very clear invalidation, very clear potential long setup, and in my opinion target has been reached in this scenario, as we now hit the most common wave C target. And we did so by hitting this 1.618 at least 27.7k. It goes all the way up to 34k though. But also over here you see two fibs. Once again, you might recognize the colors, 1.236 and a 1.618, taken from the high of 3 to the low of 4, which are very important wave 5 targets. Like this whole area is a very important wave 5 target area. So is this it? Are we going down now? Well, I would like to see at least a little bit more upside, let's say, because I would love price to hit the high time frame range value area low at 28.8k, and also the 1.618 over here at 29.6k has very nice confluence with a wave X target, which then is the 0.382 taken from the all-time high to the low of W, both sitting at exactly the same level, basically 29.6k. Plus, if we go towards the 29.6k area, of course you have the big number 30k very close as well. You have the support resistance area over here as well. So that is a very interesting area for then a potential short setup, entering the shorts and then moving it to the downside. Just take into account your stop loss, because over here this is still a very rare wave C target. I don't expect it to hit if this is a wave 5, because wave 3 is already extended, and then wave 5 tends not to extend. That would be very rare as well. And if wave 5 goes all the way up here, it has to go far above the most common target, which kind of means it has to be extended. And yeah, I don't think that is happening at the moment because of this wave 3 already being extended. Now, if we then go to the low time frame, then the bullish scenario is that wave 1 over here and wave 2 are already in, and we're currently working on the towards the upside with then another 1 2 over here, and then more upside to come. What I don't like about this scenario, and the fact it's an alternative therefore, is that wave 2 actually just missed out on hitting the 382. I put the 382 on the chart, but it actually didn't hit it. A slight, like a few dollars difference, which is actually something I don't like, because wave 2 minimum target, and very rare already, is the 382. So yeah, this is not too fond of this wave 2, let's say. And then what we're looking for over here is another 1 2 before then a 3 to the upside. And then trading this potential long setup over here with the stop loss below the 2. Of course, purely educational, this is not my preferred scenario. And if we look at the volume as well, then you can see that, yeah, the chart currently is doing something like this, right? It doesn't look too bullish. Volume was increasing in this wave over here, but since we have been making higher highs over here, the volume has been dying, and you can clearly see the volume is slowing down while price is making higher highs, and that is not something you want to see if you are a very big bullish believer at the moment. Now, if we then go to the bullish and bearish scenario, because the trading setup is the same, it basically means that wave 1 is going to come over here, and then we're waiting for a wave 2, or wave X is going to be here, and we're going to go to much deeper prices in a wave Y. For the trading setup and the target, it does not matter, as this is still a green wave 5 with wave 4 over here, going for wave 5 in a 1, 2, 3, 4, 5 setup. The fibs that you see over here, the 1.618 and the 1.236, taken from the high of 3 to the low of 4, is a very interesting wave 5 target area. And as you can see, we're currently in the middle. Again, the 1.618 is sitting at 29.6k, which is an interesting area, with also the high time frame range value area low being very close. So potential setup is entering the short lettering over here, stop loss somewhere safely above, trading it to the downside. And then the question is, how deep do we go? Because it's either going to be a wave 2 or it's going to be a wave Y, and Y is going to go much deeper than the wave 2. But the minimum target then would be, of course, wave 2 targets. So yeah, interesting setup. If we then go to the micro time frame, there is actually a few setups that I like to show you, starting with the new ones, and then talk about the existence ones, which I think is also very interesting. So no, let's actually start with the other one first to get clarity. Also, so on a low time frame in this scenario, we then have a 1, 2, the last impulse, remove the volume, 1, 2, 3, 4, and then wave 5 over here. And then what we're looking for on the even lower or more local count is that this is a blue wave A, followed by an A, B, and then an ending diagonal in the C, which then creates a blue B, so an expanded flat, A, B, C. And then in the expanded flat, we then have an A, B, C as well with an ending diagonal. However, as you can see, this doesn't look that nice anymore, to be honest. This is not my preferred scenario. Yeah, wave 3 hit the target, but wave 2 already had this is a very rare target for wave 2 in a ending diagonal setup. This is a rare target for wave 4 in an ending diagonal setup. Yeah, and also if this scenario would play out, then the fifth wave in this ending diagonal, this being a 1, 2, 3, 4, 5, is not allowed to go above this level, like the 1-to-1, which basically is 28.8k. But just above that level, we also have the high time frame range value area low and some other confluences, and I would like price to hit it. So it's a little bit of bias, but another reason I don't necessarily like this scenario at the moment. The other scenario is that the high is already in, and that is with this scenario over here. So in this scenario, we then have again 1, 2, 3, 4, and then this is a ending diagonal in the 5. A little bit different in this case, where because now it's an ending diagonal in the 5 and not in an ABC. Big difference there, by the way. And then we have this as a 1, 2, 3, 4, 5. Now, once again, wave 4 over here hit very, very rare targets, and wave 5, the target of a wave 5, the maximum target of a wave 5, 28.7k, which also is the invalidation, is just below the other interesting confluences, which is something I don't necessarily like too much. Of course, what price can do and sometimes does is just before very interesting resistance areas, it actually turns around, making people feel FOMO and, oh, I missed the trade because I didn't enter, I was waiting for price to come here. And then eventually what it does, it moves to the downside, and then during the next pump, it either goes through or does, I don't know, some other crazy stuff. And then people that actually wanted to enter here are gonna have doubt, and they're gonna miss the trade once again, basically. So yeah, something to keep in mind. And that's why I very often talk about laddering positions. So yeah, but in this case, we then have a potential 1, 2, looking for 3 to the downside. If we then go to some other scenarios that I now deem more likely, also compared to the scenario just shown, I mean, it's still the micro time frame, of course, but in this scenario, we then have a yellow 1, 2, and then a blue 1, 2, 3, 4, 5 to finish the blue count, which is the high of 3, then 4 and 5, which in this case, the 4 hit the 0.236, which is a zigzag in the 4 over here before an impulsive wave 5. And in this scenario, then we have a 3 wave in the A, looking for some sort of a 3 wave in the B maybe for this expanded flat, and then a impulsive move to the downside. And the expanded flat target, most common target, is the 1.38 and the 1.236. Potential shorts over here, stop loss above, trading it to the downside. Important over here, CVD, because what I do like to show you guys is the CVD. So on the chart, what you can see on the chart, we actually took this high with this high over here. However, on the CVD chart that I show over here, which is AGGR, the website is in my Discord. What you see over here is that this high did not yet take this high. Very, very interesting. And this is important because we have over here a low, we have a higher low and lower lows on the CVD, which is a bullish divergence. So on the chart, the bullish divergence has played out on the Coinbase chart, that is, but not on the CVD chart over here. So one could say, hey, it didn't play out yet, so we might still see more upside. Absolutely. So we have some bullish divergences. However, we also have bearish ones because on the chart, we took this high, moved to the downside and have a little bit of a retracement. And if we then zoom in, then more locally, you can see we have bearish divergences with now a lower high on the chart, but then over here in yellow, a higher high on the CVD. One thing to note is that locally, it's very confusing because we also have here a higher low and then the blue line shows a lower low. So there's not clear-cut confluence, but it is just something to notice that, hey, this is still a bearish divergence, even though there's still a bullish divergence here. This is still bearish. So something to keep in mind, a little bit messy considering the divergences on the lower time frame in the CVD. But it's just interesting and good for context. And then the other scenario, the final one, is that this is a WXY and then a bigger A, potentially then trading the A to the upside in an expanded flat B to hit this target area and then move to the downside. And I have to see other chart because this price action starts to remind me of the price action that we had. This is the 4-hour chart in basically August 2021, where over here, this was wave 5. So this over here was wave 5 with wave 5 ending here. And then we move to the downside in a WXY. And then eventually, like this was one corrective structure. Eventually this was an ABC basically. And then we had this as an A, this as a B to hit the target area back in the day, and then a massive C to the downside, as you can see and probably remember if you were in the markets back in the day. So this price action over here makes me remind me a little, or the price action we have now reminded me of what you see on the chart right here, where, hey, we just missed out on maybe a target, we move to the downside, then we move to the upside and get a massive move to the downside once again. Would be quite nice, to be honest. But yeah, I hope this video was helpful or valuable to you. Thank you for watching and subscribing, and I will see you at my next video. Bye bye.